Hello, everyone. This is Kelli Ballard. Almost time to go live. We're going to wait a few minutes and let people tune in. Hopefully, we'll have some business owners show up tonight that want to talk about their numbers. The year is coming to an end. I want to learn about how we can do two things. One, end strong, and two, prepare and plan for next year. We will get started right at the top of the hour. Be prompt, keep our promise. We'll do Q&A at the end if anyone has any questions. Again, this is Kelli Ballard, the owner and founder of Business Resource Group. I have been working with small business owners for over 30 years. Love working with the very best people on the planet. Have learned so much from the business owners that I've had the privilege of supporting. And look forward to talking with some other business owners this evening and hopefully empowering them with some information about how they can get a better handle on their numbers and what's going on with their business. All right, it is 7 o'clock straight up. So we are going to get started here, and hopefully we'll get some people logging in and asking some questions. But again, my name is Kelli Ballard. I am the Abundance Business Coach, and I love helping business owners discover how they can find an abundance of the things that they want in their lives. And most of the time, people want abundance of time, peace. When I ask business owners what they want an abundance of, money is usually not right up there at the top of the list. It does show up, but not first, second, and usually not even third. But business owners are all about their money, and they're all about their time. And time is one thing that business owners wish they had more of. And we can talk about that a little bit more on another day. Tonight, we're going to take a quick, brief look at our financial statements, at where we get our numbers. How does our business talk to us? And when the business is talking to you, are you hearing what it has to say? Because your business has a story it really, really wants to tell you. So how many people are aware that there is 145 days until tax day? 145 days until tax day and 34 days until Christmas. So yeah, that's not always good news. And if you feel like you're unprepared and unready for tax day, don't panic. It's not too late. We can help you. And I will give you some tips on how you can get ready yourself if you don't want to outsource that piece. So Let's see, how is this going to work? Are we going to be able to advance our slide here? Okay, so for those of you who do not know, this is the first time that Kelli is playing with this Facebook Live, and I need to figure out how to advance the slide. So, okay. All right, so one thing we're going to talk a lot about this evening is awareness and how awareness can affect and change behavior. If you were to log into your online banking and realize that your bank account was overdrawn, your behavior would not choose to go spend a lot of money that day. The awareness that that was overdrawn would change what you had planned to do. If the bank says that you only have $100 in the bank account, you're not going to go write a check for $300 or $400 because you know it's not going to clear. At least I certainly hope that you wouldn't. So awareness changes behavior. So when you become aware of your numbers, it can change and impact what you do. And the people that the business owners I talk to, one of the things that I tell them is reading and understanding your financial statements each and every month allows you to run your business instead of your business running you. Many, many times as business owners, we feel like we are at the effect of our business and the business really runs us. We're not sure who owns who. So awareness changes our behavior. So being financially aware is a very good thing. It will empower you with information that will help you to run your business, will help you to make wise and good decisions about where you want to go. If you know where you want to go and you set a goal and plan in place with a plan, then you are able to work that plan and get where you want to go. But being aware of your numbers is really, really critical to getting there. So that's what we're talking about tonight, is financial awareness and understanding your financial statements. The two most commonly used financial statements are your profit and loss and your income statement, or profit and loss or income statement. Those two terms can be used interchangeably. The other one is your balance sheet. And I'm going to talk a lot about both of these, but I'm going to explain the difference to you in just a minute. You'll see the next to profit and loss and income statement, it says temporary accounts. Next to balance sheet, it says permanent accounts. The reason for that is that your profit and loss or income statement is a set of accounts that will tell you how much money you have brought in and how much money you have spent during a specific period of time. Your income statement can be created for any specific period of time that has a start date and an end date. You can run that for a month, a quarter, a year, a week. If you wanted to run it for a week, you could run that for a week. If you wanted to look at this week, this year versus the same week the previous year, you can do that. If you want to compare the third week of every month to the third week of every other month, that is a comparative analysis that can be done with the profit and loss. The balance sheet is a snapshot of the physical health of the business. Kind of like when you go to the doctor and you get blood work done and you get the report back that tells you how your blood test and levels related to what they consider normal. Your balance sheet is that snapshot of the financial health of your business. That is a document that banks are going to look at for determining your viability for a loan. Can you repay the loan? That is a document that your tax preparer will use to prepare your taxes. And it is a document that you can use to make sure that your business is as healthy as you would like for it to be. Why are financial statements important? Financial statements, they are the way in which your business communicates back with you. Your business wants to tell you everything that's going on with it, and your financial statements are the way in which it chooses to do that. They indicate the performance and the value of your company, provide you with a consistent standard to measure your company's success, and inform you of your business's success and or failures so you can make better decisions, because this is your business. I've talked to many, many business owners over the years who feel as though their business is running them. I have had business owners say to me, I don't know if I make 25 cents an hour some days. And being able to look at how much money they were bringing in, what their assets are, what their liabilities are, allows them to make good decisions about growth, projections, budgeting, and so on. So right here, I'm gonna take a little bit of a left turn, and I am going to talk about one of my favorite hobby horses, which is commingling of funds, a habit that is very easy for business owners to get into and to use far more than they should. And by commingling of funds, you blur the lines of what your business is doing and make it much more difficult to get a very clear accounting picture of the success and or failure of the business. So my adamant recommendation to all business owners is do not commingle funds. Have a bank account that is specifically dedicated to the business. If you're a sole proprietor, you can run personal expenses through that bank account. I strongly recommend you not do that. Paying for business expenses from a personal account can cause you to not claim all of your legitimate business expenses on your tax return. So don't do that. Use a specific dedicated bank account and credit card accounts for all of your business income and all of your business expenses. And it may seem redundant. It may seem like a lot of extra work. Trust me when I tell you it's not. You will not be sorry. Doing so, even as a sole proprietor, allows you to see a very accurate picture of your business and how much money you are truly taking out of the business. And if you're commingling funds and using your business account to pay for personal expenses, it's very difficult to get a good handle on the actual profitability of your business. So now we're going to talk about the profit and loss. Your profit and loss records your sales, your total income. Many businesses have multi-channel income. Our e-commerce clients may sell on Amazon, Etsy, eBay, and many other channels that are out there, Poshmark. So sales income can be multi-channel. Even realtors and brick and mortar restaurants, bars, pubs can have multi-channel income. And depending on the needs of the business and what the business owner wants to see on their financial statements would determine how we set up those income accounts and thus report and break down the income. And by that, I mean, let's say we're talking about a restaurant that needed and wanted to keep their alcohol sales less than 40% of their food sales. So we would